we kind of picked the timing for this topic because we are coming into the end of financial year. It's not a bad time to be sort of sitting back and looking at where the business is heading and starting to lock in what your budget is going to look like for next financial year and how we think how it's going to roll, and some of the disciplines we want to have in the business from a budgeting, but also very importantly from a forecasting perspective. A bit of housekeeping at the beginning. We're going to cover why we should have a budget and a forecasting process, what a good forecasting process or system needs to look like. And then we're going to get a bit more practical, and there's a lot of different ways you can display data, a lot of different tools that are on the market these days. We have our own tool called Xact Clarity that our advisory team use. So the principles are all the same, but we'll just showcase what our forecasting system looks like on Xact Clarity. From a housekeeping perspective, as we've just seen, looks like the chat is alive and well and working for us, which is great. And as I said, it is our preference that you put your question out there to everyone so that we can all see that question. The video, that's always the number one question in the chat. The video will be available at the end. We will email it around. And hello to all of you people watching the video after the fact. We hope you find it just as valuable. We'll also be sending a checklist. We sort of built out a checklisting guide for forecasting, so we'll send that around as well. And I think we've actually got a forecasting and budgeting template that we'll share. There's a couple of polls that we'll stop by on the way through, and then at the very end there is a survey that will pop up. If you can fill that out, there's only a few questions. It's a good way for us to get some feedback from you guys on the session and anything else you might like us to cover in future. All right, a little bit about us. I'm sorry if you've already heard this before, but there's a quick plug for Xact. We have two foundation layers in our business in terms of services we offer. Tax and compliance. It's all about how we structure your business so that you can make the most of all the levers you can pull from a tax minimization perspective, but also, we're operating in a pretty risky space. So what's the sort of entity structuring we need to have set up to protect your assets and make sure that things like personal homes and all that sort of stuff are not at risk? Bookkeeping is the next foundation layer. So we offer a specialist building and construction outsourced bookkeeping service. These people obviously are really good at all the core hygiene things around AP, AR, reconciling bank, super, all those sorts of things that I know can get on top of you. So they do all that piece, but they also do job costing and back costing to the extent that they'll match up transactions through to One to Build Xact, Build Trend, Procore, all the rest of them. So we know the full sort of software stack, and that team are really good at the technical side of bookkeeping, which is key these days. Financial control. So financial control and ScaleX are the services that Dave and his team offer. It's very much about getting financial clarity into your world so you can actually see where your business is heading, see how it's performing, have someone like Dave by his side to unpack that performance every month. And then the ScaleX product is about having Dave and his team run alongside you as a growth partner to help you not only on the finance side, but help you from a strategic perspective around operations, team, people, sales and marketing, all those sort of critical aspects of growing a construction business. All righto, that's enough of all of that. Let's do a quick poll. I wanted to get your sense of how you're approaching forecasting. So there's a few questions here. How confident are you in your current cost to complete forecasts across all jobs? We're going to talk about forecast cost to complete later on, but how confident are you in the accuracy of your forecast to complete? How often do you update your job forecasts? Not doing it all, daily, weekly, monthly. And then what is the biggest barrier stopping you from forecasting accurately today? That last one is a multiple choice, so it could be all of those things. that are getting in the way for you when it comes to forecasting. There's just some options. So those responses are coming in, Dave. Forecast cost to complete. We're going to talk about that later, but that is one of the real, I guess, critical data points that we've got to properly understand in this world, isn't it, Dave?
Yeah, it ends up being probably the most critical part of the process. Without it, you can't do your budgets, you can't do your forecasts, and really you have no idea where you're going. So that forecast cost to complete, and you'll hear us talk about it all the time. It's really, really critical with so many moving parts in the construction game. Knowing that and nailing that is critical to your success.
Yeah. Okay, I'll end that poll there. So just quickly share that result. So in terms of how confident are we in terms of the cost to complete across all jobs? We're about the middle, although there's a 7s out of 10s, 5s out of 10. So it's a bit of a bell curve in terms of the way that response has gone. We've got a decent chunk, 36% of people saying they're not really forecasting. You're in the right place. Hopefully we'll be able to give you a good reason to do that from now on and some ways to approach that. And then most people who are forecasting, it's a monthly. Some people are updating daily and weekly. I know in our business, in the accounting practice, we're updating it all the time. At a minimum, though, in construction, we think it's a monthly discipline that needs to be in place. And then, yes, there's a whole mix of reasons why we can't get to it, or there are issues around data, capability, all the rest of it. Okay, I'll stop sharing that, and we'll move on to, I guess, just a bit of initial framing, Dave, in terms of getting our heads around something like budgeting and forecasting. It's a challenging industry to operate in, right? It's this idea of pulling the people together that often haven't even worked together to build something that hasn't existed before. It's not a game that we could treat lightly, Dave. It's a tricky one.
Yeah, that's right. And as you said, there's hundreds of moving parts on any one job site at any point in time. So, it's no wonder that it's really difficult to predict, budget and predict and forecast where you're going and all those sorts of things. But what we do know and what we see in our clients who do it well, when you've got your budgeting, your forecasting piece under control, even though you can't control everything that's happening out there, what it does do is it gives you visibility as to what's happening and gives you time to react to what's happening and basically form some pathways to make some changes. And that's the most critical thing. And the most critical thing we need is time, because if we've got time, we can formulate a plan. If we don't have time, we're just reacting in the spot. And most of the time for our clients, it means they end up losing margin.
Yeah, it's a tricky game to play. I'm just going to change the way I'm sharing this, because that I don't think worked very well for us. And I'm not sure we could see you. So I'm just going to change horses here. Need to just share that screen there. Okay, so it's also a futures game, right? So more than a lot of other industries, we're making decisions now. We might be pricing jobs. We might be thinking about what the team capacity needs to look like, not just for over the next week or couple of weeks or even the next month or so. This is we're having to lock in a price that is going to crystallize way out into the future. Yeah. It's another challenging dynamic in this space.
Yeah, unlike a lot of other businesses, we're quoting jobs now that might take 12 to 15 months to finish. So we're and why we call it a futures game is because we're locking in a price now and we're trying to predict what's going to happen for the next 12 to 15 months. So we're trying to factor in price rises in labour, in subbies, materials, all these things right now, but we're not actually going to deliver that for 12 to 15 months. So it is a very difficult game and is unique game. And again, it's why the building game is such a risky game and so difficult, and so many people get it wrong, because it is so many moving parts and such a long tail. Like a lot of jobs, a lot of industries, you quote today, deliver tomorrow. You know your costs. Your costs can't get away from you. Building is the complete opposite. So that's why our forecasting and budgeting really becomes really important for a business like businesses in the construction game, more so than probably any other industry.
Yeah, I know, and certainly, it's even different than from a, say from a trades perspective through to, if you're a resi builder or, custom builder, even projects, if you're dealing with fixed price contracts, you're having to lock in your margin or the idea of what your margin's going to be well in advance of the actual project going ahead. You can't, if prices change, if materials increase, as we've seen just recently in supply chain, you're trying to always predict what the future state is going to be. And so this idea of setting a budget is really important so we can get a handle on over the next 12 months, what do we think this business is going to look like? What do we think ultimately what my earnings are going to look like at the end of the year? But then forecasting to be able to lock in as we know things are changing, what the future is going to look like, and that can flow through all the way through the cycle, the commercial cycle, through to how your repricing work and how you're pricing new jobs that you're looking at right now. So when it comes to, I guess, we're just in the helicopter again here, thinking about the various elements that we've got to get right in construction. We sort of think about this often with clients to talk it through from these different frames. So commerciality, building, actually the on-site operational side of the business, and then the administrative side of the business. You could think that budgeting and forecasting is something that only really plays out in the commercial side, or maybe the admin in terms of putting spreadsheets together, the finance component. It really is something that touches on all three of these frames, Dave.
Yeah, correct. And like for a building company to be successful, we can't just be good at building. We've got to be good at the commercial aspects. We've got to be good at the admin. So when we talk about commerciality, we've got to understand what our cost drivers are. What are our contract timings? What are our contract obligations? We have to be on top of that at all times. What do our contracts say we can and can't do? When can we raise variations? So then we've got to have the administration side to follow behind that to make sure that if we've got time bars, that we are lodging those things in the correct time so that we don't preclude ourselves from any of those things. So there's lots of moving parts that are going along. So budgeting and forecasting is critical to support this, but most importantly, we have to have the right people in the right seats. So if we've got the best builders, but our commercial skills are not up to speed and our admin skills are not up to speed, we're going to lose margin, hurt ourselves, and not achieve our budgets in our forecasts because those parts aren't keeping up with the fact that we're doing really great work on site. So all these things fit together, and what that shows coming through in your budgeting process and in your forecasting process, it should give us a roadmap, and we'll talk about this a bit later, of the areas we need to improve on and keep working on, because you have to have all three of those singing together to be really successful in this business, because there are so many moving parts in these types of businesses.
Yeah, 100%. Okay, so if we come to, I guess, budgeting itself, so we're oftentimes, budgeting and forecasting all gets lumped in together. They're all sort of the same thing. We're going to try and separate them out today, and we're going to talk about budgeting. There's sort of largely two types of approaches to budgeting. This top-down approach or a bottom-up approach. Now, we're talking about a budget for the whole business here. Obviously, you'll need to have a budget for a specific job, but we're talking about a budget for the whole business. And again, this is a really important time of the year to start thinking about the discipline of building out the budget for the year ahead. So I know, Dave, we quite often hear about this sort of top-down approach. Really what we're after is a bottom-up. So it's something that's built from all the known knowns and all the projects that we've got in play. You just want to talk through, though, the difference between these two different types of budgeting approach.
Yeah, so on that point we just raised before, Phil. So budgeting is something we do at the start of the year, right before the year starts, and it's static. We lock it in and we don't move the budget. Forecasting is what we adjust going forward. So the first step in the process is to set a budget. And as Phil said, there's multiple different ways to do this, but the two main ways to do it is a top up versus a bottom up. Sorry, top down versus bottom up. The top-down approach is literally taking a very simplistic view of what did we do last year? Let's add 10, 15, 20% onto that, flow that through the numbers, and there you go. That's our budget done. Now, that could work in a simple business. It doesn't work in construction because there are so many interdependencies that you have to factor in to that. So that is a really simplistic view of the world, and it doesn't reflect the reality of how a construction business actually operates. That's why we and most people should prefer the bottom-up approach. Now, the bottom-up approach, we start to look at a job-by-job build-up. So how many jobs do we think we can do in a year? How many starts? What's our target margin? So we're starting to build up, layer in job over job over job to get to our revenue and our cost of goods sold, and then we get to our sort of gross profit, okay? Then we layer in what overheads do we need to support that, okay? If we've got 12 jobs or we have 50 jobs, I'm going to need different overheads to support each of those, okay? So it's not just pick a number and hope for the best. It's actually what drivers, what do we need to consume? How much effort do we need to consume to deliver 12 contracts versus 50 contracts, okay? So it's not just take last year and add that. Because if you've got significant growth forecast, your admin pool will most likely need to grow as well. So again, we have to forecast what does that do for our admin? How much extra labor do we need? Again, the other thing when you do it this way and you build it up on a job by job basis, it highlights all the interdependencies. Okay, so let's say we're doing 12 jobs a year. Do I have the internal labor, the subbies to deliver 12 jobs a year? Pretty quickly when you start to map that through and you start to do all your programming, you go, well, I've got 5 blokes. That's not enough to deliver 12 jobs a year. Okay. So again, it gives us points to a roadmap. What do I need to do? I need to start hiring some more people. When do I need to start hiring them? Because when I need to start hiring, I need to factor them into my budget. I need to start factoring in the extra wage costs and so on and so forth. So when you build it from the bottom up, that's what starts to highlight and starts to give us the indicators and all the challenges and all the roadblocks and challenges that we're going to face, but it also gives us time to plan for them. And that's the most critical thing, is having time to plan and work out that, okay, in 2 months' time, we're going to need another 2 chippies. 6 months' time, we're going to need another 2 again. We're going to need another concreter because our current concreter is full. We can't take any more jobs. So I need to find another concreter. So when you're building your bottom-up budget, that's those sorts of things that come out and allows us time to start planning those.
Yeah. Okay. So just running through here then. So why budget? And you've covered a bit of this already, but I guess this idea of loading in. I mean, because we said, we talked about this being a futures game. We've got contracts that are already in play. We've got contracts that are already signed that are going to kick off at a future date. So most construction businesses will have a fair degree of certainty in terms of what a ground up budget is going to look like, say for the next 6 months or so, and then we're going to dial in what our leads look like, what our job quotes that we've got going out the door, some factoring in of some trends around that as well. And for our business, inquiries dropping off, are they increasing? Do we have a number of architects we're now working on, and we expect other jobs to be coming from them? So there's all these sort of factors that we can then start to build into the budget. But ultimately, once we've done that and we've done our first pass or our first, draft of the budget, it's going to show us the gaps, and where we may actually have some problems.
Yeah, correct. So when we do that job by job build up, then we build up our overheads on top of that. It's gonna show us that, okay, we've got 12 starts. We've only got 3 of those locked in. We need to find another 9. So we need to win work, and then also not just win work, but we need to win it at the right time. We need to sequence those jobs because we can't start all 12, win 12 contracts a day and start them all at once. So we have to, know what the gap in our pipeline is, like how many jobs do we need to win, and also when do we need to win them? Okay, because that also then affects your staff and your capacity of staff. Okay, because we're all starting them all on top of each other, we're going to run out of staffing capacity. Or we're confident we're going to do that, so we'll bring some more staff in to deal with that. So there's decision points you can make again, but knowing what the gaps are, and also what's your working capital. What if I start all these jobs at once? Am I cash flow positive on my jobs, or am I cash negative on the start of my jobs? If I'm cash negative, how much extra working capital do I need to fund these jobs? So these decisions all start to play in depending on how you run your business, how you set your contracts up, the timing of your contracts. So again, knowing what those gaps are allows time to plan. The worst case is we start 4 jobs at once and we run out of cash because we didn't plan for it.
So we kind of, it makes it very plain what those gaps are. So we can do sort of revisions of the budget to then start to factor in, okay, well, I'm now going to need to have an extra job start to land in month 7, 8, 9, etc. I'm going to need to start bringing on potentially extra internal staff to be able teams to be able to deliver that work. So we can start to plot out in the budget, what we think this year is going to look like. So once we've done that, it then becomes a very good focusing tool. So we've got our scorecard, we've got our roadmap for the year. It then becomes a focusing tool in terms of what we're going to do to need to run down that number at the end of the year. Or, I'm saying at the end of the year, but this is how the year is going to play out.
Yeah, correct. And as we keep doing, it gives us a roadmap of all the actions we must do. We must hire some staff. We must get some extra subbies. We must get some more working capital. So it allows us the ability to focus on what things we have to hit to allow us to hit our budget. Okay. Otherwise, we're going to run into them and won't have any time to plan for them. It also too, if you do a proper budgeting process and you bring your team on the journey and align them with, okay, team, we're going to do 12 starts this year. That means, effectively just think of it, we're doing one a month. We're starting a new job every month, okay? So as the team goes along, they know why you're pushing to get out of that site by the end of January because you've got no one starting in February. So they understand and they can come along with the journey and say, oh yeah, I know where the bosses are really pushing because we've got that next start we've got to get to because we've got 12 jobs to get to this year. So bringing your team along with your budget and what you're expecting to do and what you're hoping to do in the year really helps everyone understand as a team what we need to achieve within the year.
And for those who are using more internal labour as opposed to subbies, harder and harder to find, but also to lock in particularly those key roles, leading hands, supervisors, those kind of, I guess, more management layer roles that are going to enable your scale as you grow. So the budgeting process gives you a lot more certainty around what you've got to play with when it comes to remuneration for those key staff members. And you need to be really tightly considering those kinds of figures in the budget as well. Dave's been integral for our success, growing the business. I know I'm going to have something for him in 3-6 months' time to make sure that he's, properly engaged in this business and I'm not going to lose him to the market. Well, how am I going to do that? What are the numbers I'm going to run? I'll go to my budget. I'll lock it into the budget where I can have some certainty or at least a good model in place so that I can be having those kinds of conversations with Dave. But I can then be sharing the budget with Dave so that he can see, okay, well, I can see now how the business is traveling and what we're going to have to do and the numbers we're going to have to hit. And so that's a very good focusing tool to be able to, probably not your whole team, it really is a business by business kind of decision, but certainly those key growth roles, it's so important to be able to include them in not only the budget build, because they'll have a lot of insight in terms of how the business is traveling, but also what that final budget is looking like. Like this is the business's scorecard. So it shouldn't just be something that the owner puts in his drawer or sticks on his wall. It is something that can be actioned across particularly your leadership and your management team, that key layer of growth roles. Okay, so we're going to move now to forecasting. So we've got our scorecard. We know where we think the business is going to go. But as we said in the beginning, Dave, that's a nice idea. In reality, so many different things are going to happen. We just don't have control over everything. And so forecasting, I think, is really where the real financial rubber hits the road. So let's talk through why forecasting.
Yep. So as we know, the moment we put a budget in place, the day after, it's out of date. It's wrong. Yep. Okay. So what we don't want to do, we don't want to keep moving the budget. We want to have the budget. This is what we agreed as a management team, this is what our goal is. This is where forecasting comes into the process. Forecasting gives us the ability to adapt to things that have happened. All right. So we start with our budget. All right. We've got that locked in. Then actuals come in. So at the start of at end of each month, we should be reviewing our actuals versus our budget. How are we going? Are we on track? Are we off track? What does that mean? If we're off track for whatever reason, we want to understand what that is. We want some learnings. Why are we off track? Do we not have enough starts? Was there more costs than we thought? So then we go, okay, based on those learnings, we can adjust our forecast moving forward and reprioritize two things. One, where we think the year's going to land, because obviously if costs have increased and we can't increase our revenue, then our margin's going to get squeezed. Okay, so obviously what we thought we were going to make as profit at the start of the year is now a different figure in our forecast. So again, let's forecast. What does that actually mean? Does that mean we can still hire the same amount of people we wanted to hire? Or, oh, it's a bit tight, we can't do that anymore. So it gives us an ability, because we know where we're heading, rather than we just keep trundling along and then we go, oh, I didn't realize that we're having a problem. It gives us that. It gives us calls to action. What have I got to do? Have I got to go back and reprice? Or when I'm pricing again for these other jobs that I haven't quite won yet, I've got to put some price increases in there, so I'm not copying those margin losses on the future jobs. So it gives us the ability to do that. So that's why the forecasting piece ultimately is probably the most, in my opinion, is the most important thing, because we're getting real-time feedback on what's happening in the market, and we're making adjustments and we're making changes, but then we're flowing that through between our actuals and our forecast, just to always keep an eye on where our year's landing and what our next, ultimately, hopefully, our next 12 months looks like. Because we really want it to be a rolling forecast. We always want to be looking forward. Where are we going? When do we have to start winning new work? What are the margins doing? Are they going up? Are they going down? So this whole forecasting piece becomes the lifeblood of the business. Okay, we've got that budget, it's set. And we locked it. We're not touching that. It's now what does the real world look like going forward? Okay.
And we're gonna get through to, I guess, the detail of this and some of the how-to, but at a high level, it is this ongoing process that needs to happen. We like to, at a minimum, this should happen monthly, that we gather all the actuals out of whatever system we're using, or even in the platform itself. We're comparing that to what our budget was. We're taking that step back, and this is a difficult thing. It's obviously a big part of what you guys do, because you can be the sounding board for that, but also the strategic advisor for that conversation as well. It doesn't have to be with Dave and his team, but it is a good thing to be able to do that step back with someone else. Even within your own team. I talked about those key roles earlier on, bringing the team on that journey again. We've hit the end of the month, the actuals have come through against all the jobs. This is now the position for those jobs. What do we take out of that for an adjustment to the forecast, so that we can then have a proper conversation about what are we going to do now? Job 002 is tanking. We're going to have to look at how we bring that forward. How do we incentivize the team? How do we have a conversation about a subby that may not have delivered on time? All those sort of things that are really critical for getting our overall picture back on track. But we just can't do that if we don't have the information in front of us to be able to draw those learnings and then turn it into action. So the why, which I was sort of leading with before, but this whole idea of an early warning sign for jobs that are sort of already in progress, We're seeing this improve quite a bit, I think, across the board. It used to be that everyone really, you get to the end of the job and then you work out whether you were making money or not. It's good to see that there is more awareness now that we need to know how this job is going, whilst it's in progress. But it's this idea of the early warning signal in terms of where these jobs are heading. Yeah.
Yeah, correct. And this is again, this putting a dollar figure to the gut feel is really that forecast cost to complete again. It's really like, we know we've got a problem in this job. What's it actually mean? What's the impact? What's the margin impact? And therefore, if I've got the margin impact on 3 or 4 jobs and I overlay that all together, take my overheads off, am I still making money? Am I making an appropriate return on the business? So when you're in the biggest challenge for our clients is when they're in the trenches, they've got a million things going on and they're just busy trying to get the jobs done. They're not at times sitting back and saying, okay, what's the overall impact to the business? I just need to get this bloody job done because we've had 3 weeks of wet weather. I need to get it finished, blah, 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 because I'm running late and I can't start the next job. That's really important, obviously, to get the jobs done. But what's the financial impact? What's the impact on your staffing levels? That's where we need to sit back. And that's why with our clients, it's once a month we sit down, we're having 2-hour meeting with them and go, what is actually going on? How is that flowing through to your bottom line? And are we still okay? If not, what are we going to do to fix that? What steps do we need to put in place to go through there? So it gives that opportunity to adjust and recover and make some changes and plan it. And if we're doing that, then hopefully we're having more sleep, less stress because we're actually planning it. The worst part is when something's going wrong or sideways, and we don't know what's quite happening, and we're stressing and we're jumping at shadows. Like, at least if we know what's going on, what the actual impact of that is, financially and on time, we then can at least plan for it, and therefore we can take that stress out, and then we just get into the delivering of that process. So the forecasting is really, as Phil said before, it's your early warning system to say, hey, we've got a challenge. What are we going to do about it?
And if it's not in the forecast, if we've not sort of properly accounted for this and got it all out of our head, got it all out of the systems that we're using, out of the people, getting this update in play, then we're going to take it home, we'll take it to bed. It's a really disruptive thing to be worrying about the future of your business all the time. Now, this isn't a silver bullet. Obviously, we work in a dynamic environment and it is a stressful business to be in often. But actually just being able to see the known knowns of where things are heading and have a mechanism for seeing that to help you with your decision making means you're not just carrying around every day and at night all of these stresses that are unknowns. We do know a lot about how jobs are traveling, so we need to capture that from a financial perspective into the forecast. Okay, so we're going to talk about how the forecast works at an individual project level. So how does this forecast cost to complete work within the frame of one particular project? So Dave, we've got a project here that kicks off where we reckon it's going to be sort of 800K in terms of the cost of the project to deliver.
Yep.
We get out of the ground and our actuals to date are running up. We're starting to account for them, but we hit an issue on site. We've got an overrun, and obviously it's impacted, how we're going from a time. And in this game, time is money, right?
Yep.
What does that do then in terms of the knock-on effect to the rest of this job?
Yeah, correct. So this is the essence of it. So this is the forecast cost to complete piece that we keep banging on about, okay? Because if in the top one where we say budget's 800K and we're not going to reforecast cost to complete, and we just merrily go along and say it's all right, we'll get to the end of the job and I'll worry about it at the end. I'll tally it all up at the end and I'll work out where we're actually at. So that's obviously what when we start with a lot of our clients, that's where they start. That's their process, and then they hit the end of the job and go, oh my god, we just lost 100 grand on that job. I thought we're going to make 200 grand. I only made 100. Oh no, that's terrible. So what we want our clients to do, and it's not easy, and I'll walk through an example in a minute after this, is forecast cost to complete. So we know the block layer has had an overrun. We know there's a time delay. We want to now try and forecast what does that mean to the overall budget of the job, okay? It's gone, in this case, we're saying it's gone from 800,000 to 900,000, okay? Because we've had an impact on the cost delay and we've also had an impact on pre-lift. It's going to cost us more because the job's running late, right? So we're going to need our site manager for longer. We're going to need all of our team longer on the job. It just costs us more money. You know, everyone knows that the job runs late, it costs you money, right? We just burn money. So we want to quantify what that is and then try and quantify what that actually means. Like, is it 820,000? Is it 850? Is it 900,000? From that, we can make decisions about, was there a condition in the contract that caused this? Therefore, we can go back to our client and, you know, maybe have a variation or a discussion about overruns and things like that. And more importantly, again, is, well, where we've had this problem, what can we do to prevent it happening in the future? Or do we need to price more risk into future jobs because we've now come across this issue and this issue could repeat itself. So therefore, we need to factor some more risk into our pricing, some more margin to cover this risk down the track. But yeah, as I said, without trying to do that forecast cost to complete, you'll have to go all the way through the job, complete it all, pay all your bills, and then go, oh, I didn't make anywhere near as much money as I thought I did, you know? And now, what can I do about that? So the sooner we can get into the forecast cost to complete and start to quantify how to finish a job properly and inside a budget, the better off we'll be.
Okay, so now we're moving kind of, I guess, from a concept point of view and why we should do this and the backgrounding piece to, how do we actually build a proper forecasting system? Mm-hmm. Yeah, it's a system. It's not just one person. It flows throughout the whole business. Starts with understanding how the contract's going to play out from a claims perspective and cost perspective. But let's just talk through, Dave, what these critical components are to the forecasting system. And so often, we talk about forecast cost to complete, but there are a few other things we talk about a lot, which is job costing, or back costing, it's often referred to as, is the core pillar to having a good forecasting system in place. Just in case people don't know what job costing or back costing is, can you just give us a quick sort of definition of what job costing is all about?
Yeah, so job costing is where you take your estimate. I estimate all these costs and it's going to cost $800,000 to do the project. And now I'm actually tracking all my costs. Every invoice that goes on that job, I'm tracking that to the job. So I'm tracking the job costing, all the expenses, to see what's the cost of the job and am I still on track to make the 800,000 budget, or is it more or less, or whatever the case may be. So that's why your forecast cost to complete. Now, forecast cost to complete doesn't always have to be bad. We can actually have some wins. We had a saving on windows, so we made 20 grand extra, so we've got more margin. So let's forecast that in there. So we know there's ups and downs. And so what we want to try and do is forecast all those ups and downs, quantify the overruns, both in dollar and time. You want to understand what they are. And as we talked about before, we then factor that into our actions and our roadmap. What can we do? Do we have to wear it? Can we push some of those costs back to subbies? Can we get some more money from the client? What are the things we can do? And then we ultimately, once we've been through that cycle, we can ultimately look at our overall profit margin. So we started, say, 20% margin. Are we still on track to make 20%? Or now is it 18 or is it 22? So again, where do we go to? And this is a constant cycle that goes all day, every day, and something that should be reviewed formally at least once a month, where you sit down and go through job by job, this whole circle process of forecasting to get to the final outcome of, well, am I still on track to make my margin? Because ultimately, at the end of the day, that's what we're here to do. We set our forecast margin 20%. Are we actually going to achieve that? And what level of confidence do we have to achieve that?
So, everyone's at a different point of the journey with this sort of thing. And I know, because we'll have a bunch of people on this call that, have seen a number of our webinars before, are not starting from scratch here. They'll often have some software in play, or they've got some spreadsheets going on. They're trying to make it work. Maybe if you've got, we're talking about there's a range of these kind of stories, but if there's a particular kind of, I guess, example you can give of what that journey looks like, going from, not having any kind of clarity at all through to, having a lot more control over your destiny. If you want to just take us through a good sort of client example there.
Yeah. One of my clients, when I first started working with him, he was doing he'd run about 7 or 8 jobs at once, like renos, sort of $200,000 to $500,000 style renos, and never at any point in time really understood where they were going to land from a budget point of view. What was the final cost going to be? Just busy doing all these jobs, phone calls, trying to estimate at night, doing all these things, on the go, but never actually, knowing where he's going. So, would always get to the end of the job and there'd be a nasty surprise. Oh, didn't make the money I thought I was going to make. Didn't.
And then
plan
that's
that.
happening across multiple jobs.
Multiple jobs. Like he's got, as I said, he's got 7 or 8 going at once. So he's like everywhere. So, so we started with the whole forecast cost to complete, and he goes, I don't know what's going to cost me to complete it. I don't know how to even work that out. So what we worked out, and this worked for him, may not work for everyone. For a simple system like him, I'd sit with him and say, righto, according to our budget, we've got $200,000 left to spend on this job. The original budget was 500. We've got 200 left to spend. Sequence me through from today to the end of the job, what's left to do. I got to do the cladding, I got to do the painting, I got to do the landscaping, I got to concrete the driveway, blah, blah, blah. Because builders are excellent at sequencing. They know what's got left to be done on jobs. I said, right, just give me some ballpark figures of what each of those sections are going to cost. And I just literally sit there and add it up and go, that comes to 190,000. We've got 200,000 left in the budget. We're okay. At this point in time today, we're okay. Obviously, if it was the other way around, we had 250, to go to finish the job, we go, right, we've got a problem. We need to start planning. What can we do about it? So again, just getting in that routine, and we're doing this month in, month out. It was pretty clunky at the start, but then we got into this system and this routine of going pretty well. And what it did was, where we were missing, it was highlighting what we're doing. And for this particular client, we were getting the estimate wrong at the start. We were missing things in our estimates, and therefore we could never actually achieve the margin because we were missing certain parts because he was so busy doing everything, he wasn't spending enough time at that. So we outsourced the estimating piece to a third party to do the prep work. We would then check it and then go from there. So then we found that because we knew that that's where our misses were. And the other thing too we identified is that our labour was taking too long. We budgeted 100 hours on a job, and our carpentry gangs were taking 150, 200 hours. So we were losing on every job on labour. So again, it just highlighted where we were making our misses and where we could then fix it and change it through. To the point now where when I sit with him every month, when I go through my cost complete, he knows what he's doing now. He goes, yep, that one's good. I've got that. There's a problem here, that. So we got really good. It took us nearly 12 months to get there, but now it's a really well-oiled machine. And we know what's going on. We know where our misses are. We know what we've got to keep tightening up on. And so that's what good looks like. You start somewhere where you got no real clarity, didn't know where you're going, didn't know where the job's finished to. Now he is pretty much bang on his jobs. He knows where his jobs are going. He could tell me within probably 5 or 10 grand in all his jobs whether he's winning or losing.
So there's a journey there in terms of going from not really knowing what's going on to having a lot more control, better decision making, because we've formed a much clearer picture of what's happening, and it's improved the way we're approaching, estimating and all of the processes that we need to be good at. But it wasn't, a jump straight to perfect.
Oh no!
You started with a fairly, really quite there'd be some people on this session who would hear the first part of that story, and there's still a lot of guesswork going on there, but we need to kind of start with where people are at and their capability and their level of sophistication, and not expect that people are going to be gold standard straight out of the gates. So the point of this story is that wherever you start on this forecasting journey and this idea of trying to capture the forecast cost to complete, just start to materialize what you think those costs are going to be, what's still yet to come. You should have some good systems in place as you get more sophisticated to have even higher degree of accuracy around, what's coming down the pipe for each project. But you need to start somewhere, and then over time with that discipline, you'll just get better and better and better. And this becomes like muscle memory at the end of the day, and you get very, very good at being able to predict what's happening in the business and across and for the future. So I'll stop sharing now. In terms of at a practical level, we've got some major moving parts when it comes to understanding the financial future of where you're heading. We've got our project management system, which is going to be our One to Build or Build Xact or Build a Trend or whatever the case might be. And all of our job level data lives there. And then we're going to have Xero, which is where our overhead costs are going to be. It's also, where we've got to pay a BAS, and we've got our balance sheet position as well is going to live there. So there's these sort of, I guess, different places where we're squirreling away data that we need to bring together. Now, you can do that in a number of different ways, and platforms will have different ways of doing it. We've built out a product called Xact Clarity. It's what Dave and his team use as a way of converging all that data into one spot. So we're going to be showing how it works for us and for our clients, but really the principles are the same in terms of the type of data that we want to look at and the process that we want to go through when we're looking at building out our forecasts and updating our forecasts. So Dave, let's start here. So we're looking at a dashboard in terms of, ability to compare in terms of time of year and comparison to previous year as well, right?
Correct. So as I said, the starting point is we roll all the jobs, all the performance of every single job up, and we see what's at the helicopter, what does it mean for the month? So in the month of March, we did 251,000, our budget was 450, so we'll get into the why in a sec, but we want to see where we're going, okay? We want to see what our cost of sales are doing. And overall, we want to see where do we go? In this month, for example, in this dummy client, we lost 25 grand. We thought we we're going to make 47. Again, what did we do last year? Are we getting better? Are we getting worse? What's happening? What's moving? Financial year to date, we've done 2.8 versus our budget that we set and we didn't move. Remember, we locked that down. We did 4 million. But more importantly, so again, we do a forecast. So we sit with our clients when we're doing the forecast and we say, okay, we're at just over 2 million, but we forecast to be 2.5. So we're actually behind our forecast as well because things have changed. We had lots of wet weather. We couldn't get out of the ground. So there's no way we could achieve our budget of 4.5 million for the year. Okay. It just wasn't possible, right? For factors outside our control. So we reforecast and said, well, good, looks like 2.5 million, right? But where are we at? We're at 2 million with 3 months to go. Are we going to make our full year forecast? Feels like we probably will. So again, it's how we tracking against the forecast is a real position versus when we started the year and we look forward 12 months and guess what might happen, what has happened again. So again, we lock the budget. We don't move that. We move our forecast to reflect what's actually happening. Okay. And
now, if this was a particular client of yours, Dave, this is not looking good, right? We had a budget that we'd locked in at the beginning of the financial year for 4 mil, financial year to date. It was 4.5 for the full year. I was hitting and hoping that I was going to drop 500 out the bottom. For whatever reason, as you say, delays, weather, all the rest of it. We're now financial year to date. We're forecasting a loss at this point.
That's right. So currently we're tracking a loss. We're hoping to come just back over break even. Okay, we think we can get back to break even, and that's our best position because we've had all these things go against us. Blah 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 blah. Like there's lots of factors in there. So okay, so that's our new goal post. That's what we want to hit. The 500 is now unachievable because there was wet weather, all these other things. Okay, so it's always. The forecast becomes critical as to where we're moving to. What does good look like now? We thought good was for 500,000, but good right now might be $39,000, okay? Because that's all we've got left, all right? So the way we do that is we go through on a job-by-job basis. We look at what our contracted work is. We look at our pipeline. What are our hot opportunities? Yep, I'm ready to sign, okay? Haven't signed yet, but I'm ready to sign. I've got some warm opportunities. I've got some other opportunities. And we want to build it up, as we said, on a job-by-job, budget-by-budget on each of your jobs. It's not just pick a number, $500,000 and hope it's there. We want to be specific about jobs. What are the real opportunities? Where are we really at? Because ultimately, what we want to give our clients is this. Now, what this represents, this black line represents our overheads. The green is our contracted works, hot opportunities, and other opportunities. What this is telling me is this is our gross margin, not revenue. This is our gross margin. So this gap here, it's saying here we've got $47,000 worth of work, cost us $35,000, so we're making $12,000 profit. Okay, so we're good at the moment. We're good all the way out till January 27. Okay, based on what we've got locked in at the moment, we're good. After that, if we don't win work, we are now, our overheads are higher than our gross margin, therefore we're not making money. So what we're trying to do is visualize how much runway we've got, what does the future look like, and what actions do we have to do. Now, obviously, if that work dropped off in September, if that green line dropped below our overhead line, we've got a real problem, because we know to win jobs is not we don't just start quoting and then a week later we start a job. It's a month-long process. So we really have to get our skates on. So this is saying here, we really need to start winning work around October, November, locking it in to start in Feb, to late Jan, Feb, because that's what this is telling us. So we're getting that clarity, we're getting that visibility, that forward-looking piece that we can plan and create an action plan and steps. We might need some more marketing, start talking as architects, like whatever it is. These are all things we work through day in, day out with our clients about what this is showing us. So this is a great visualization, and this is what, whether you do it on Excel or however you do it, doesn't matter. But this is what you really need to be trying to get that piece and give you that peace of mind.
So can you just flip back to the previous one that we had before, just the inputs for this? So, I mean, you can do this in a spreadsheet, and you can, you can have a graph that sits over the top of it that, what we were just showing there. Those contracted work pieces, these are jobs that we know about, that we're already in the middle of. We've either started them or they're going to start, and we're running it out across to the right in terms of, what the margin looks like, what the costs look like, revenue looks like, and then ultimately what margin looks like. And then we're going to see from a month by month perspective, where all of that's going to land as well, so that we can start to see, how the financial future is going to play out. And that is a known quantity. That data you can get out of your project management systems, your build Xacts and all the rest of it. You should be able to just export that out and drop it into a spreadsheet, so you can see line by line, this is what's happening. The next lines down are almost as critical, and they're the real call to action. So I've got jobs that I'm quoting on right now. These are hot opportunities that are in my pipeline. I'm like at contract stage. We know this is going to land if everything comes off the way we want it to on this date. And so we need to factor those in as well into the forecast. The warm opportunities are probably obviously a bit more speculative in terms of whether they're going to come through or not, but it's good to see what that bigger picture is going to look like too in terms of the pipeline. So then when we look at the graph, Dave, we just return to that page. We can then see, well, my overhead's that black line, and we're just looking at margin, as Dave said. It's not revenue. This is just margin. So my overheads are traveling on around that sort of 35K mark. So at the moment, my contracted work, I'm just ahead in terms of the net profit that I'm going to get out the bottom of this. But that date out into the future there, when my contracted work passes over my overhead numbers, that's D-Day. That's my runway essentially that I've got in this business. So it's a very motivating factor to see something like this, to say, well, that margin isn't enough. I'm only just above my overheads. I really need to start bringing in some of those hotter opportunities and having them land earlier, as early as I can, so that I can really improve my margin position at the end of the day. So look, that's all of that data comes in automatically into Clarity. So it's a nifty kind of tool that the team, that Dave's team uses. So we don't have to import CSVs and all that sort of stuff. Unfortunately, none of the platforms really tie it all into one picture. You'll have your overhead data over in Xero. You need to have your balance sheet picture and all those sorts of things in Xero as well. And then you have your GP and your project cost related information over in your project management software. So we just use this tool to converge all that data into one spot. And this is the pack that we will run through with clients. We can't. I guess there's a little bit of chat in there about the different platforms They all work a little bit the same way. I know there are a few that are further ahead in terms of their feature sets, which is great. And there's some really good development going on around the country right now that we're really pleased to see. But ultimately, to get the full picture, you're going to have to export data and bring it into something like a spreadsheet or a reporting tool. This is the one that we use internally.
And Phil,
okay.
just one last caveat on that. The missing piece we're not going to talk about today is you've got to do your work in progress accounting. For this to actually work, you have to do your WIP accounting. There's heaps of webinars and stuff on that, but that is the missing piece. So just dragging your data out and not doing your work in progress accounting entries will not give you the right answer. So just remember to factor that in as well.
Okay, so I've just sort of taken over from you there, Dave. Thanks for that little walkthrough clarity. So I just wanted to run a poll. There was a few kind of direct messages there. This poll we run, it's about whether you want to have a chat to us about anything we've covered today, or if you want to reach out to us to talk about our services. So quick little poll there. Would you like a consult request on outsourcing my bookkeeping? So that's that whole, are we keeping up to date with, bank recs? Are we keeping up to date with APAR and the discipline around all of that, but also the job costing component? If you're really struggling to find a bookkeeper who can get into the platforms and do that sort of stuff for you, then that's what that service is all about. Dave and his team are those middle lines there. So engaging a fractional financial controller. So someone who can sit down with you every month, go through all your job by job data, look at how that's going to look from a forecast perspective, support the decision making around, well, now we know this, where are we heading as a business? What are we going to need to do in terms of bringing jobs forward, looking at other supply chain options, all those sorts of conversations Dave and his team have with their clients. They also do the level above that, which is this ScaleX, which we kind of call fractional CFO. So a CFO is often much more strategic across the whole business and will help in terms of, what systems are we using, what people have we got in play, what processes have we got across the business, and support decision making in that way. And then finally, it's a pretty hot topic at the moment with the budget that's just been announced. There are a lot of changes coming through in terms of capital gains, negative gearing, the way trusts are going to work. So we do tax and structuring from a building and construction specific perspective. So if you're interested in talking to us about minimising tax through all the legal ways to do it, particularly if you're doing your own developments and how do I structure those, all those sorts of things, and also protecting personal assets to make sure that we keep those out of the way should things not work out. So they're the options there. Just finally, I'll leave that up there. The last thing I wanted to say was we're going to send out the video and the forecasting. We have a strategic planning workshop. If you're interested in that, we'll be sending more information out about that. It goes over 3 months. It's in person. It's with 10 other building and construction business owners. We take you on a journey over 3 months to build out the whole of your strategic plan for the business, starting with 10-year, 3-year, 1 year, and then what's happening over the next 3 months. So Dave and I lead that session, and you'll be surrounded by other business owners that are dealing with the same stuff that you are. It's a good way to sort of set yourself up with a good plan into the future. The finance piece is just what we've talked about today. That program covers the whole of your business. And we will be doing a tax webinar soon. We're just trying to pick the date on that. We know that legislation is still sort of on its way through Parliament at the moment, so we still need to see more detail in terms of how these changes are going to work out. So keep your ears and eyes peeled for that session where we'll do another update as much as we can update. It's a bit of a moving feast at the moment. Righto, we are just over time. Dave, thanks, mate. Really, really good stuff. This is such an important topic. So thanks for taking us through that today.
Perfect. No problems at all.
We'll see you on our next webinar sometime soon. All the best out there. Keep safe and do well. We'll talk to you soon.
Thanks all.
Bye.